Who is Warren Buffett? Let me tell you a story about one of the greatest investors of all time, Warren Buffett, also known as the Oracle of Omaha. He isn't just a billionaire, he's a living legend whose investment decisions have shaped the modern financial world. Warren Edward Buffett was born on August 30th, 1930, in Omaha, Nebraska, USA. From a very young age, he showed an incredible talent for business. At just 6 years old, he was already selling chewing gum and soft drinks to make money. And when he was only 11, he made his very first stock investment, buying 3 shares of City Service Preferred at $38 each. That investment taught him his first big lesson. He sold too early for a small profit, and later watched the stock skyrocket to $200. From that moment, Buffett learned the power of long-term investing. As he grew older, Buffett followed his passion. He graduated from the University of Nebraska at just 19 years old, then went on to study under the legendary Benjamin Graham at Columbia Business School, the father of value investing. That experience changed everything. Buffett adopted the philosophy of buying undervalued companies and holding them for the long run. After working briefly for Graham's firm, he returned to Omaha and started his own investment partnership, Buffett Partnership Ltd. The results were incredible, and his wealth grew rapidly. Then came the turning point. In 1962, Buffett began buying shares of a struggling textile company called Berkshire Hathaway. Most people would have ignored it, but not Buffett. By 1965, he took control and transformed it from a dying business into one of the greatest investment conglomerates in history. Through Berkshire Hathaway, Buffett invested in iconic companies like Coca-Cola, American Express, GEICO, Bank of America, and later, Apple, one of his most profitable investments ever. Some of his most legendary deals include, in 1976, he bought 51% of GEICO, a move that later became one of Berkshire's biggest assets. In 1988, he invested over $1 billion into Coca-Cola. Today, that investment is worth many times more. In 2016, he invested heavily in Apple, turning it into Berkshire's most valuable holding. Because of his remarkable success, Buffett has received worldwide recognition. In 1999, he was named one of the greatest money managers of the 20th century. In 2007, he was listed among Time's 100 most influential people. In 2021, Forbes ranked him as the 7th richest person in the world, with a net worth of more than $100 billion. But what truly sets Warren Buffett apart isn't just his wealth, it's his generosity. He has pledged to give away more than 99% of his fortune to charity. Together with Bill Gates, he founded the Giving Pledge, encouraging billionaires worldwide to donate their wealth to make the world better. Warren Buffett is not just an investor, he's a teacher. His life is proof that patience, discipline, and long-term thinking can change your destiny. And that is the story of the Oracle of Omaha. 2. Warren Buffett's investment method. 2.1. Only invest in what you understand. Warren Buffett believes that investors should buy stocks of companies whose business models, competitive advantages, and growth potential they truly understand. He once said, "Don't invest in something you don't understand." For example, he avoided investing in technology for decades because he didn't understand the industry. It was only when Apple became a company with a sustainable competitive advantage that he bought in and made huge profits. 2.2. Invest for the long term, don't follow trends. Buffett is a believer in value investing. He believes that the stock market may fluctuate in the short term, but in the long term, the true value of a company will be reflected in its stock price. He once said, "The market is a place where money is transferred from the impatient to the patient." For example, he held Coca-Cola stock for more than 30 years and benefited from the brand's steady growth. 2.3. Always have a reserve fund. Buffett always keeps a large amount of cash in order to be ready to take advantage of opportunities when the market is down. He once said, "Opportunities only come when others are panicking." For example, during the 2008 financial crisis, he invested in Goldman Sachs on favorable terms, earning billions of dollars when the economy recovered. 2.4. Don't invest with the crowd. Warren Buffett has always gone against the market trend. When everyone rushed to buy technology stocks during the dot-com bubble in 2000, he stayed out and avoided big losses. He often reminds investors, "Be fearful when others are greedy, and greedy when others are fearful." 2.5. Focus on the company's leadership team. Buffett not only looks at financial statements, but also evaluates the management team before investing. He prioritizes CEOs with ethics, long-term vision, and excellent management ability. For example, he invested in American Express after realizing that the company's CEO had a reasonable restructuring strategy after a major scandal. 3. Lessons from Warren Buffett for investors. Warren Buffett is not only an excellent investor, but also a master of financial strategy and risk management. His investment principles have helped millions of people around the world have a more correct view of the stock market. Here are valuable lessons from Warren Buffett. Understand the company before investing. Carefully study the financial statements, business lines, and competitive advantages. Be patient and disciplined. Don't follow trends. Invest for the long term and avoid being affected by short-term fluctuations. Always have cash reserves to take advantage of opportunities when the market declines and can invest in valuable assets. Choose a company with a good management team because they are the decisive factor in the success or failure of the business. Do not let emotions dominate investment decisions. Rely on data and analysis instead of following market psychology. Warren Buffett is not only an investment legend, but also a model of perseverance, discipline, and long-term vision. If you are looking for a sustainable investment strategy, learn Buffett's principles and apply them to your investment portfolio. Hopefully, this article has helped you understand who Warren Buffett is and his investment methods. You can start your investment journey by researching strong businesses, avoiding investing according to the crowd psychology, and always having a long-term plan. If you enjoyed learning about Warren Buffett and his secrets, don't forget to hit the like button, subscribe, and turn on the notification bell so you won't miss more tips on investing and building wealth.